Hello, friends. So we're here again with my dear friend Andy Gastone from Nexa Mortgage, and today he is going to be talking about velocity banking and the benefits of it. And I do think that it is a great opportunity, especially if you're looking to invest in more real estate. So, Andy, take it away.
Hello, everyone. Nice to be back again. So, Velocity Banking is a program where instead of 30 years of paying off a mortgage, in 5 to 7 years or less, the whole mortgage gets paid off. And it's basically utilizing a HELOC or a home equity line of credit. People don't realize when you pay a mortgage, most of the payment goes to interest. Actually, very little goes to principal. So in a year of paying a mortgage, people don't realize that 10 months of that is interest. Actually, 2 years is principal. To have a little longer time period in 5 years of paying off a mortgage, typically 4 years of that is interest. Actually, 1 year of that is principal. So by using a home equity line of credit, we kind of flip it. You know that instead of going mostly interest, then it mostly goes to principal instead, thus shortening the years of you paying it off, shortening the maturity date, and also lowering the payment every single month. So it does change people's lives.
So with that, like who is the most likely candidate for or would qualify for the HELOC or velocity banking?
It's anybody that has a little bit of equity. So fortunately for me, I do have a few lenders that have access to up to 95% of the combined loan to value. A lot of the HELOCs that are available now are usually about 80 to 85%. So I have access to 90 to 95% of combined loan to value. So a little bit of equity. The sweet spot is with somebody with a credit score of 680 and above, and 95% combined loan to value. So basically, what that is the appraisal value and divided by the principal balance. So 95% of that and less, you should be able to access the home equity line of credit and pay off your mortgage faster.
So what I gathered is that with a HELOC, so for current homeowners, you can actually pay your mortgage faster just because you are reducing more principal instead of paying the interest rate. And but that being said, you typically like what is the going rate for a HELOC or the velocity banking?
So before I answer that question, there is a difference with the rate of an amortized loan and a simple interest non-amortized line. So a lot of times, and this is actually me in the past, where a lot of loan officers, when we describe what a loan is on a line, we describe it as if it's the same animal. It's not an apples to apples comparison. The rate on a mortgage is amortized. So what that means is you need an amortization schedule to really see what the payments are. It's that document that in the next 30 years or the next 360 months, you get to see every single payment. A HELOC is simple interest and it's non-amortized. It's so simple that you actually could use your own calculator to calculate it. So even though the rate on a line is high, so let's say let me round it up to let's say at 9%. A 9% rate on a HELOC is actually lower than a 5% rate on a mortgage. So for example, if you would buy a property worth 300,000 and the rate's at 5%, in 30 years, you're paying $600,000 on that property. There's an effective rate, so to speak. So the loan rate. So and I've calculated this, and to make it easier for people, if your current rate on your mortgage times two at a zero, that's basically your effective rate. So I tell people all the time, my 9% line rate is lower than your 5% low rate. Let me say that again. My 9% line rate is lower than your 5% loan rate because, well, 9 is lower than 100. It's not an apples to apples comparison when it comes to the rate. So, yes, the rate on the line is higher, but it's actually simple interest and it really acts like it's a lower rate than a loan.
Like so you can't compare it, it's not apples to apples, but who would benefit with this type of banking or like this type of line of credit?
So anybody that currently owns a home or are about to buy a home, because you can actually add a HELOC already when you purchase. So again, anybody that doesn't want to pay a mortgage. So and a lot of times, us as home buyers, we want to pass on these properties to our kids, right? It's very natural for us to think that okay, when I get older or when I pass, and all of us are, we're going to pass on to their kids. But people don't realize that they're not passing on the property to their kids; they're actually passing on the debt to their kids. With this program, we are now able to not only pass on property that's paid off to their kids, you're able to pass on multiple properties. So I have clients that are buying two, three, four, five properties a year because of velocity banking.
Well, there you have it. Thank you so much, Andy. I know this is, like something that is not really talked about. And what I would suggest is if you are interested with this program, to sit down, have a one-on-one with Andy, because there's just like more information that about this that you need to know, a little bit of time for our video. It's just not enough. So if you have any questions, reach out to Andy. And as always, I'm here to serve and thank you for watching.
I appreciate it. Thank you so much. Thanks for having me.